The market is constantly judging your inner emotional composure. The price movements are merely reflections of collective human greed and fear. You must recognize that the market observes your reaction to every fluctuation. Your success depends entirely on maintaining cold, rational detachment from the daily chaos. You are failing because you lack this single critical virtue. You possess enough technical knowledge to identify profitable patterns frequently. However, knowledge alone is useless without the necessary mental fortitude. This profound inability to wait is the true thief of your capital. The market is not built for your daily entertainment requirement. It exists solely to transfer wealth from the impatient speculator to the disciplined professional. Stop treating trading as a stimulating video game requiring constant interaction. Understand that the market owes you nothing but the chance to observe its intent. Wyckoff understood the deadly cost of unnecessary action now. Richard Wyckoff taught that every transaction you make costs you money, time, and mental energy. Acting without overwhelming conviction is an expensive, pointless donation to the opposing side. Do not confuse restlessness with genuine strategic necessity in the field. The journey of a speculator is often a solitary one, marked by the intense pressure of making high-stakes decisions alone. It is easy to lose perspective, to be swayed by the noise of the crowd, or to falter in your discipline after a series of setbacks. This is why we created this channel, to serve as a constant source of these timeless principles, a place you can return to, not just to learn, but to recalibrate your mindset. If you are committed to the path of a professional speculator, subscribe to our channel and return to these lessons. They are here to provide not just knowledge, but reinforcement and perspective when you need it most. We must talk about the brutal discipline of true trading patience. Patience is not a soft suggestion. It is a rigid, mandatory prerequisite for survival in this business. This discipline means letting 99 out of 100 potential setups pass by without regret. True profitability emerges only from this extreme selective restraint. If you cannot master this one rule, immediately shut down operations. If the urge to trade overrides your clearly defined waiting strategy, you are mathematically doomed. Failure to achieve supreme patience confirms you are structurally unfit for this profession currently. Save your capital now before emotional impulse completely eradicates it forever. That internal urge to do something is your worst enemy. This feeling is the powerful, destructive manifestation of human impatience and psychological need for control. You must recognize this impulse as a signal of imminent financial self-destruction. Successful trading requires deliberate confrontation and suppression of this inherent flaw. Every truly failed trade began with premature engagement weakness. Consider all your losses. They usually stem from entering too early before confirmation was undeniable. Premature action forces you to guess. Waiting allows the market to confirm your analysis accurately. Impatience guarantees you buy at the top and sell near the bottom consistently. Your patience is the only reliable capital you genuinely possess. Money is fungible and easily lost, but unwavering discipline is an inexhaustible asset if cultivated properly. When the setup is ambiguous, deploying patience preserves your monetary capital for later, guaranteed opportunities. Treat your ability to wait as your most precious and heavily guarded resource. Focus only on the absolutely big, effortless winning moves only. The greatest fortunes are not accumulated through constant chipping away at the market day after day. They are made by identifying the massive trend-defining moves and holding through the noise. Effortless profits arrive when you align perfectly with the prevailing undeniable major direction. Wyckoff's core principle is waiting for crystal-clear confirmation first. He taught that a move must be fully proven before commitment of significant capital is justified. You wait until the accumulation phase is complete, and the major breakout is structurally confirmed by volume and price action. Only then, when the intentions are transparently clear, do you act decisively. Ignore the constant noise of minor, daily, insignificant fluctuations entirely. These small swings are designed to shake out the weak-willed and confuse the average spectator. Professional traders focus only on the grand, underlying structure of the supply and demand landscape. Shut off the daily noise and concentrate solely on the foundational Wyckoff structures forming. Learn to identify the quiet, deliberate footprints of the composite man. This fictional, powerful entity operates with extreme patience and calculated secrecy during market cycles. Your job is to understand his actions by reading the volume and price context during critical areas. If you cannot see his deliberate preparation, you have no business engaging the market yet. He accumulates silently. You must wait for the powerful spring move. The composite man builds his position slowly, often confusing retail players into selling prematurely into his hands. The market will inevitably generate a powerful, decisive upward thrust, the spring, once accumulation is complete. Waiting for the spring ensures you ride the movement engineered by massive capital. Patience is not inactivity. It is preparation and silent observation time. While waiting, you are actively analyzing the structure, calculating risk, and defining exact entry points. True patience is the focused energy of a predator preparing for the kill, not mere laziness. This period of intense observation is essential to remove emotion from the final trade entry. Define the exact setup you are religiously waiting for precisely now. You must write down the specific objective criteria that absolutely must be met before you lift a finger. If the current market conditions do not align precisely with your written definition, you do nothing at all. If you cannot define your required setup clearly, you cannot execute properly. Never chase a price move already in vigorous, full-speed progress. Trying to jump onto a train already moving at full speed guarantees poor entry timing and catastrophic risk management. The optimal entries happen when the market is quiet, consolidating, and confirming the exhaustion of the opposing force. A new, better setup will always emerge shortly. The greatest profit is found in the entry timing accuracy sharpness. A perfect entry minimizes exposure to volatility and instantly places the trade into profitable territory. Imperfect timing forces you to endure unnecessary drawdowns, challenging your emotional resolve constantly. Accuracy of entry is significantly more important than the gross size of the position itself. Let the market prove its move intent without your participation first. You are not required to be present for the market's entire confirmation process or test phases. Wait until the critical resistance is definitively broken and retested successfully by the price action itself. Observing intent removes the guesswork that plagues less disciplined traders. The waiting period is your greatest silent risk management defense. Every moment you spend waiting, you are protecting your capital from premature, unnecessary risk exposure. Patience ensures that your risk capital is deployed only into scenarios offering maximum reward probability. Do not undermine your defense by rushing into uncertainty simply because you are bored. The powerful market must always come to you. Never chase it. You must position yourself strategically and wait for the ideal conditions to develop perfectly in front of you. Chasing the market implies desperation and always leads to inferior entry prices and increased emotional stress. The true master allows the forces of supply and demand to deliver the opportunity directly to their doorstep. Retail traders pay for the illusion of perpetual activity required weekly. They believe that continuous screen time and constant small transactions equal trading competence and success. Professionals understand that success is measured by annual returns derived from a handful of exceptional deliberate actions. Reject the fallacy that you must trade daily or even weekly to be a genuine trader. How often do you trade simply out of boredom or restless emotion? Be brutally honest with yourself about the psychological origins of your recent trade decisions. If you enter because the previous day was quiet, you are trading psychology, not market opportunity. Identify and eliminate any transaction born purely from mental discomfort or lack of stimulating action. This psychological weakness destroys capital faster than market volatility. Emotional trading exposes your funds to unnecessary risk that no analysis can adequately mitigate effectively. Market volatility might cost you a percentage point. Emotional impatience costs you your entire bankroll eventually. Overcome your inner demand for action, or face continuous painful losses indefinitely. If the trade setup is ambiguous or hazy, the answer is always no. There is no reward for guessing or for attempting to clarify a messy chart structure during live trading. Ambiguity simply means the risk is too high, and the probabilities are insufficiently in your favor yet. Never trade a setup that requires mental justification or excessive interpretation. You must cultivate the supreme comfort of actively doing nothing. Professional traders spend the majority of their time observing, waiting, and preserving mental clarity carefully. Learn to find satisfaction and confidence in the act of deliberate non-engagement itself. Your capital is growing stronger simply because you are not actively eroding it during uncertain times. Smart money does not require constant activity to validate existence. Large operators measure success not by trade count, but by the magnitude and reliability of their infrequent, major wins. They understand that patience allows them to extract maximum profit with minimal stress or overexposure. Your silent presence is your greatest tactical advantage over the impatient crowd. Only enter when success probability approaches guaranteed certainty levels. Wait until the risk is quantified and minimized to the point where the move feels like a calculated extraction, not speculation. The best trades are those that feel safe and almost inevitable immediately upon entry execution. Settle for nothing less than near-perfect probabilistic conditions every time. Maximum leverage is applied only when the timing is undeniably right. Leverage amplifies both profits and losses, making it a tool reserved exclusively for confirmed low-risk opportunities. You earn the right to use serious size only through consistent patient identification of high-probability setups. Patience is the necessary prerequisite for the safe and effective use of leverage. You are paid handsomely for waiting, not for constant trading turnover. The market rewards the speculator who has the nerve and discipline to wait weeks or months for the true opportunity. Every profitable trade is merely the reward for the hundreds of hours spent observing and refraining from action. Your patience is the primary source of your income generation. Test yourself. Can you watch a great move unfold without remorse? Observe a confirmed powerful trend that you missed because it didn't meet your exact criteria perfectly. If you feel regret or FOMO, you have failed the psychological test immediately and decisively. Your mental equilibrium is far more valuable than the missed money from one single move. If watching hurts you, your discipline is inherently weak and flawed. A professional accepts that not every profitable opportunity is suitable for their strategy or risk profile defined previously. You must reach a point where missing a move is simply registered as neutral data, without personal emotional consequence. Strengthen your resolve until the market's activity becomes entirely objective noise. That intense FOMO feeling confirms your decisions are emotionally driven. Fear of missing out is the most expensive sentiment in the financial markets, driving desperate, poorly timed entries repeatedly. This powerful emotion is the antithesis of the cold, rational decision-making required for long-term survival. Emotional impulses like FOMO must be ruthlessly eradicated from your trading process entirely. The market tests your inner resolve repeatedly before rewarding confidence. It uses choppy periods, minor pullbacks, and sudden fake-outs to probe the patience and commitment of every participant. Only those who maintain disciplined patience through these challenges are allowed to reap the substantial rewards later. Recognize market turbulence as a necessary examination of your psychological fitness. Trading less frequently means you are thinking better and clearer. Reduced activity forces you to focus your analytical energy only on the highest quality, most certain setups available. When you trade frequently, you dilute your mental focus and accept subpar probability conditions subconsciously. Prioritize depth of analysis over breadth of daily market interaction. If you cannot wait 6 weeks for the ideal setup, quit now. The market may require prolonged periods of consolidation and reaccumulation before delivering the next major, high-confidence trend move. If you lack the mental stamina to remain completely disengaged for over a month, you are fatally impatient. Trading success is predicated on this extreme commitment to delayed gratification consistently. Trading success is 90% waiting, 10% decisive action executed swiftly. The waiting phase encompasses all the necessary analysis, rule definition, psychological control, and capital preservation efforts. Do not confuse the importance of the swift 10% action with the overwhelming necessity of the 90% preceding patience. Master the waiting, and the execution phase becomes almost trivial by comparison. Recommit to Wyckoff's brutal rule of supreme disciplined patience today. Acknowledge that impatience has been your primary weakness, and decide to eliminate it completely from your operations now. This commitment requires a rigid adherence to predefined rules regardless of internal emotional discomfort or external stimuli. Let ruthless patience become the defining characteristic of your entire professional approach. Master the grueling waiting game, or forever remain retail speculation. The painful reality is that retail traders perpetually fail because they cannot overcome the psychological pressure to act constantly. If you cannot endure the silence and the boredom, you will perpetually fund the accounts of those who can wait longer. The waiting game is the ultimate barrier separating the winners from the losers decisively. Silence, iron discipline, and waiting are the only true path to wealth. These are the foundational pillars upon which all great trading fortunes have historically been built and maintained successfully. Employ iron discipline to enforce your rules rigidly during times of intense psychological pressure consistently. Only by waiting meticulously for guaranteed clarity will you truly unlock the massive wealth potential available here. For those who wish to truly master the lessons discussed here, it is essential to study them from the source. Please take note of a unique new edition of Richard Wyckoff's masterpiece, How I Trade and Invest in Stocks and Bonds, by Max Davidson. It has been meticulously adapted for the modern trader, complete with explanations that make Wyckoff's timeless wisdom more accessible than ever. For anyone who wants to truly absorb the lessons we are discussing, this adapted edition is an indispensable part of your library. The link to this book is located in the description of this video.